last time, and it's going quite well. And I find it's great. It's a wonderful opportunity for people to learn. And so far, the feedback that I'm getting is quite positive. That's that. This particular course, this particular seminar, I've given a number of times now, probably at least 5-6 times in different areas for a reason that you will see in a minute. Generally, I find this quote to be quite powerful because those of you, how many of you do your own taxes? Let's start there. Okay, so a few of you. Very good. I find for people, especially people who came to Canada from a different country, doing your own taxes is quite a challenge. I mean, obviously every country has its own tax system, and Canadian tax system is not as simple as it seems, although it's probably much less complicated than other systems in the world. But we are facing a new reality, and I think you probably see this all the time, because the old reality, or what I call the old reality, is that the idea that a person could go to high school, get educated, get a job, work at their job for however many years, retire, and live happily ever after. That used to be the model. And when we look around at what's going on in today's world, it's a model that no longer works. So I find that the new reality is, it has many different components. One of these components, excuse me, is that people are looking at different options. And several of you have a full-time job and are doing things on the side. And more of you are thinking of doing your own thing, whatever it is. So the new reality is, in the future, I think most of us will be self-employed. Most of us will be doing the things that we're passionate about, things that we are good at, and things that really bring us money. Because the whole idea of our employer paying and taking care of us for the rest of our life, it no longer works. And actually, just in the last week, I've heard of at least 2 cases where individuals who worked for a company for a very long time, more than 20 years, and both individuals were just a few years from retirement, both individuals got fired for different reasons. And oftentimes, I think the reason is just so that the company does not have to pay the pension, which would cost the company a lot of money. So the new reality is we have to be prepared for having our own jobs, creating our own opportunities, and doing our own businesses. And I know, let's say with Avon, this is something that you do. I know with Work Canada Financial, that's your goal. And Moses, I'm sure, same with you. So sooner or later, and yes, Asante, sooner or later we all find ourselves in those shoes. How do taxes work in Canada? This is, in order for someone to do taxes, they don't have to be a brain scientist. But there are certain basic things that we all need to understand. And in Canada, the system works as follows. First of all, the Canadian tax year is based on a calendar year. So January 1st to December 31st. Between January 1st and December 31st, everyone is going to have some income. Now, it doesn't matter where your income is coming from. It could be employment, it could be self-employment, it could be investments, it could be rental properties, it could be foreign income, it doesn't matter. But wherever your income is coming from, there is a certain amount of tax that you will need to pay on that income. Okay? And we all know the premise that the more income you have, the more taxes you pay, right? Okay, so then the question that I get asked all the time is, okay, Alexei, how do I pay less tax? And the answer is as follows. There are 2 ways you can pay less tax. Way number 1 is you find ways to reduce your income. If you reduce your income, less income you have, less taxes you pay. Now, the things that reduce our income they generally fall under the category of deductions. And that's all they do. If you are self-employed, to those of you who are self-employed, they're known as business expenses, but it's the same idea. They reduce your income, less income you have, less tax you end up paying. Number 1. Number 2, there's something known as a tax credit. Okay? What's a tax credit? A tax credit is something that is given to you generally by the federal government or the provincial government, and a tax credit reflects your family situation. So if you live in Canada, you get certain tax credits. If you have kids, you get certain tax credits. If you go to school, David, for instance, you get certain tax credits. And what tax credits do is they have nothing to do with your income, they have nothing to do with your deductions, expenses, they're just there to reduce your taxes. Does that make sense so far? Because this is, in a nutshell, this is how the system works, and the more you understand this slide, everything else will fall into place. Any questions? Great. So let's talk about the difference between employment and self-employment. I'm going to ask you a question, and I'm going to get me some water. So, what are the biggest differences between employment and self-employment? And as you're thinking about it, I'll be back. So, who can give me one difference between employment and self-employment? Yes.
In self-employment, you pay yourself. So
very good.
No one else is paying you.
No one else is paying you.
Mm-hmm.
Good. What else?
You would have to pay for things like healthcare on
Yes.
your own.
No one covers your
Pension.
health and dental.
Yeah.
No holidays, no vacation days, sick days. Yes.
You
What
create
else?
your schedule.
But you're in charge of your schedule. Very good. What else?
You have to be in charge of the EI and pensions stuff.
CPP, deductions, EI, that's all falls on your shoulders. Good. Very good. What else?
Tax advantages for working from home.
Certain tax advantages working from home. Excellent. Ultimately,
You're responsible for declaring how much you make.
you're responsible for the declarations. Yes, and that is very important. Ultimately, the difference is very significant, and the difference is the control of the business. When you're self-employed, you are in control of the business. And this may sound like insignificant, but actually it's very important. When you are in control of the business, you determine where you work, when you work, when you don't work, what kind of services you provide, how much you charge for these services, who you hire or you fire. And when all of these decisions are up to you, that is self-employment. Now, oftentimes, you may have an agreement with an employer where an employer tells you, listen, I want you to work in my office to do this, this, and that. I want you to be at my office between 9 and 5. I want you, to wear a certain outfit, and at the same time, I want you to be a contractor as opposed to being an employee. And oftentimes you get into a situation where the difference between the two becomes very gray, and sometimes it's illegal, because there are certain responsibilities an employer has where you cannot be both employed and self-employed simultaneously. So it gets a little bit tricky, but ultimately, the question is the degree of control that you have over the business. One other important thing is losses or gains from the business. In your own business, you're responsible for the losses and for the gains. When you work for someone else, you're not. Great. Sorry. Actually, can you move a little bit? Perfect. Okay. All right, we're going to talk about business income. So I wanted to ask you, those of you who are self-employed, how many of you invoice your clients? When I say invoice your client, so you done some work, you invoice your client, okay? You have one.
What do you mean like send them an invoice?
Send them
or
an
no?
invoice or write them an invoice, send them an email saying, yes, I worked for you for 10 hours, please send me, whatever, $10 or $100.
I just write invoices for product and stuff.
Okay, perfect. Because the vast majority of people who are self-employed, I think in the financial world it's a little bit different. You don't really invoice your client. You get paid through other avenues, usually commission or trailing commission. But most people who are self-employed actually get income by invoicing their clients. But that's not always the case. Sometimes people who are self-employed actually have a slip called T4A. Now, is that, has everyone lived in Canada for more than a year? Okay. Because, so you're all familiar with T4 slips, T3 slips, T5 slips. So at the end of the year, if you work, you may have seen a T4A. By the way, actually, David, if you're a student and if you have scholarship, you'd also get a T4A, right? It would have different boxes. So oftentimes when people are self-employed, instead of invoicing their clients, at the end of the year, their employer or their client gives them a T4A slip. It will have something called box 48, fees for service, with a certain amount. And even though it's a slip, a lot of people who receive this slip think, oh, it's a slip, it's kind of like a T4. At the same time, this particular slip with this particular box indicates that you are self-employed. So Canada Revenue Agency would expect you to file your taxes as a self-employed individual, which comes as a surprise to a lot of people. There are other times when a person gets a T4 while being self-employed as well. Now this is a little bit strange because most of us who get a T4, it's because we have an employer. An employer issues us a T4. But there are a few exceptions when people get T4s even though they're self-employed, and these exceptions fall under hairdressers, barbers, taxi drivers. So there are a few professions, and those individuals who fall into these professions, they get a T4 slip with their, it looks a little different from a general T4 slip. But the bottom line is you have, your income is captured one way or the other. If you have a T4A slip or if you have a T4 slip. If it's not captured in one of these slips, it's up to you to capture it. And at the end of the year, it's going to be up to you to declare it. Any questions about income? Wonderful. Because when it comes to business expenses, I'm going to ask you to go into your folder and to bring out one of these. Because in the next few minutes, we will be discussing this particular form. And the reason why we're going to do that, generally, this is a form that I send to my clients for whom I do taxes. They say, Alexei, what do I need to bring? And I send them the documents. And in this document, you'll find I broke it into different sections because if you're a student, you need to bring certain documents. If you have rental properties, you need to bring other documents. I'm going to ask you to turn to page 3. Because for the self-employed folks, that is the most important page. When you are self-employed, you have business income, right? Your income comes to you on a T4A or on a T4 or just from your record of your invoices to the clients. And at the same time, you have different expenses. And these expenses generally would fall into these categories. And what we're going to do in the next few minutes is we're going to go through these categories and we're going to talk about them and what they represent. This is an area that raises a lot of questions. So if you have any questions, please keep them up until the end, and then we'll open the floor to some. All right. So income from self-employment, that is something you need to track. And then you take your expenses for the business and you break it into the following categories. Advertising. So advertising is pretty straightforward. Google ads, Facebook ads, newspaper ads. Advertising can also be let's say going to a networking event. That would be an advertising expense. Or it could fall if you have certain marketing expenses. Marketing and advertising kind of falls into the same category. Meals and entertainment. If you take your clients or prospects out for lunch, dinner, coffee, save the receipts because you can write it off with a caveat. And the caveat is when it comes to meals and entertainment, you only get to write off 50% of the meal. number one. Number two, the other thing that falls under meals and entertainment, if you take your client to a concert or to a hockey game, that is also an entertainment type of a situation. Bad debts. Bad debts is a situation where you have a client for whom you've done certain service, where the client did not pay you for that service. And we're going to take a sidestep and we're going to talk about the two accounting methods in Canada. Because the most frequently, there are two accounting methods. And the two are the cash method and the accrual method. And unfortunately, the cash method is the most intuitive. I'll explain it to you in a minute, but that's not the method that most people are supposed to use. The cash method is a method where you record your income when you receive it. You record your expenses when you give out the money. So if you've done work for someone and that person is supposed to pay you $10, a person gives you $10, you take the $10 and you, in your books, you write down, okay, I have income of $10. On the expense side, it would be you went to a store, you bought a piece of paper, you paid $1 for it. The minute your credit card, the minute you have a receipt, you say, okay, I spent $1, whatever it was. That's an expense, and that's the cash system. Unfortunately, most businesses don't fall under the cash system. Most businesses fall under the accrual system or the accrual method. The accrual method is you're supposed to record income as income when you invoice your client, even before you receive the money, and you record an expense as an expense when you've spent the money. So not necessarily when the money left your bank account, but when you expect that transaction to occur. And on the expense side, it's not really a big deal, but on the income side, it does cause certain issues. For instance, oftentimes when you invoice your clients, you do not get paid for a certain period of time. So just to give an example, let's say you do work for someone in, I don't know, December 27th. You give them an invoice on December 28th. According to your books, whatever it is they owe you, it is part of your year already. Even if the client pays you January 2nd of the following year, and that's when you receive the money, technically speaking, the money should have been part of your previous year's income. Does that make sense?
Yeah, that makes sense, but so if I work on a policy for a client on December 27th, but I don't deliver it until January 3rd, do I still declare it on the 27th?
Depends when you write up your invoice.
Okay.
So, in your particular situation,
Yeah.
Because ultimately it's not really that you invoice the client, but you get paid, let's say, by an insurance company.
Yeah, so then the policy issue date would be, let's say, later in January. Would I still declare it in December? Because it's prospectively still coming in December?
Yeah, so technically speaking, in the ideal world, if the insurance company would pay you the second you submit the second the policy has cleared and you've delivered it, then yes, the income would be counted as your income for that particular year.
Okay.
With insurance companies, by the way, it's oftentimes quite easy to worry about income because they track it for you, and you can generate a report from an insurance company that says how much money you received in that particular year.
Yeah, that's right.
But bad debts. So now, if you're thinking, why would someone not pay me? How would that be a loss for me? So a bad debt situation now makes sense. You've done work for a client, the client never paid you, but you still recorded as income in that particular year, and it could be a loss either that year or a loss in the next year for you. Insurance. If you buy insurance for a company, it could be director's insurance, liability insurance. It could be for the financial folks, E&O, errors and omission insurance. All of that consist or make up a business expense. Interest. So interest would be interest if you have a line of credit that you use for business purposes only. If you have let's say if you have a credit card, and let's say you have to pay for that credit card, and that credit card you use for business only. So that would be something that you can write off as interest expense for your business. Business tax, fees, licenses, dues, memberships, and subscriptions. For the most part, these are pretty straightforward. For instance, if, let's say, Asante, if in order for you to do your work, if you have to belong to the Association of, I don't know, Copywriters of Canada, so that membership in that organization would be a business expense for you. Office expenses, those would be things such as, let's say, calculators, such as printers, things that you need in order to run your business. And then you have supplies. Supplies are things that you need to run your business as well. And usually supplies are the things that you use quite often. So for instance, if you are a builder, the bricks that you use would be supplies. I think in the Avon case, you know, the products that you sell could be considered supplies. At the same time, they can also fall under the advertising category, and sometimes you would have the same item that can fall into different categories depending on what it is, how it is used. Legal, accounting, and other professional fees. So whenever you consult a professional, especially for business purposes, you can write it off as a business expense. One thing you'll find is when you do your taxes, it costs a lot more to do a tax return for a self-employed person than for someone, let's say, for a student. This is, you'll find this with most accounting firms. Whatever it is, you can write it off as a business expense, but for the following year. So, for instance, if you're paying $500 this year to do your taxes, then next year it will be a business expense for you. Management administration fee, pretty straightforward. This is if you hire a management company to take care of your business. Maintenance and repairs, if you have to fix certain things. Rent, if you are renting out an office, that is deductible as a business expense. And then we get to business use of home. Now, how many of you, actually Paige, you mentioned home, so I presume you work out of your home?
Mm-hmm.
Anyone else works out of their home? Asante, Pina? Okay. So the way it works is as follows. So imagine this is the floor plan of your home. And I know this is Vancouver and it's unrealistic that things would work this way, but imagine you have a room that you don't use and you can designate this one room to be your office, which basically means this is a room that you would use exclusively as an office, and you can have your clients who will come to that particular room or you can have your Skype calls or phone calls coming out of it. And let's say for the sake of argument that this room represents 15% of your home. So if that's what it is, you can write off 15% of heat, electricity, insurance, maintenance, rent, if you are renting out the apartment. Or if you own the apartment, you can write off 15% of your mortgage interest and property taxes. Does that make sense? Very good. There are a couple of caveats, and keep in mind, this is something that you'll see a lot when it comes to being self-employed, because Paige mentioned it earlier, and it's quite right. When people are self-employed, they can write off a lot of things. So oftentimes we get into this territory where it's difficult to confirm, difficult to check, difficult to prove, or difficult to disprove. So for a lot of people take advantage of situations like that. And of course, it's better to be reasonable. It's better to, I don't know, I tell my clients, the fewer things you have to worry about, the easier it is to focus on your business. So business use of home does have to be reasonable. Now, what is reasonable? Reasonable depends on your business, depends on what you do. I have a client, many clients would fall under 10, 15, 20, 25%. And what you do, you measure the area. If you don't have a spare room that you use as an office, you can, if you work in that corner, you can measure the area of your desk. You can measure the area of the filing cabinet that you use for your business, whatever it is. It has to be reasonable. I did have one client he was a photographer. He is a photographer, and he had a studio in his home. So he had a tiny little bedroom there somewhere, and then the vast majority of his office, or his home, was his studio. So he was writing off quite a big chunk. But Canada Revenue Agency, as you can imagine, they do have certain algorithms that create red flags when the system is processing a tax return. Great. Actually, before we get to motor vehicle expenses, let's talk about, we'll go further down the list. Salaries, wages, and benefits. So if you hire a subcontractor, so you hire someone to do something for you, then as long as you have an invoice from them, that is a business expense for you.
Alexei?
Yes.
Is my salary also included in this? My own salary?
No. No, so your salary, and it's an interesting question, hold it, bring it up, write it down, and we can bring it up a little bit later, because this is one area where a lot of people find it very confusing, but I'd love to clarify it for you. Sure. Travel. Ideally, it's business purposes only. Let's say you have a conference somewhere, let's say you're going to a copywriters conference in Victoria, then the fees to get there, oftentimes the hotel, you can write off as a business expense. It's also an area that gets a little bit tricky if let's say, if you have a family in that particular part of the world, or if you stay somewhere else, or if you stay longer, it gets, it can be taken advantage of. But for the most part, you know what, you do the best to document what's the reason why you're going, and in case your file gets audited, you know, if you are able to prove that yes, I went to Hawaii for 2 weeks and I had business meetings on the first 7 days, and that's why I'm writing off, let's say, half of my airfare, then that is a very different story. If you have no receipts, you just have your flight information about your trip to Hawaii. Telephone, and I also wrote business use only. It gets a little bit tricky because how many of you use your cell phone for both business and personal reasons? Most of you. So it gets, so how do you know how much to write off? So in the ideal world, if you can calculate or estimate, give your best estimates as to how much you use your cell phone for business purposes versus your personal, and usually you determine a percentage, and then that's the kind of number that you stick with. Hard to prove, hard to disprove. I don't think Canada Revenue Agency would force you to go, phone call by phone call to decide, yes, this was business, this was personal. And in Canada in general, we will find that our tax system is based on a self-assessment system. So we declare how much we earn, how much we spend, and so on and so forth. And by the way, internet, yeah, same with internet. It's unlikely for someone to use internet 100% for business. Let's say they're internet at home. And at the same time, how it's very difficult to prove or disprove one way or the other. Delivery, shipping, freight, postage, and express. So this is courier fees, UPS, things of that nature. Pretty straightforward. Motor vehicle expenses. Motor vehicle expenses. Give me some glasses. How many of you use your car for business and not for business? Actually, I have some more. So if you use your vehicle, I'll tell you how it is supposed to work. January of a particular year, January 1st of a particular year, and December 31st of a particular year, you need to write down your odometer readings. Number one. And then every time you get into your vehicle on a business type of a trip, you need to write down the date of the trip. You don't need to write down the odometer start, odometer end, but you need to write down the kilometers that you've driven, and let's say the reason. This is called a car log. And technically speaking, if Canada Revenue Agency, when you start claiming your motor vehicle expenses, if you don't have a car log, they can say, you know what, we won't accept it. Now, a car log is as you can see, is a relatively challenging thing to keep for most of us. There are apps that can help you with this particular task. I know I have a number of clients who live downtown, for instance, and a lot of people who live downtown, they don't use their car for personal reasons. They use their car mostly to drive out of downtown on business calls. But if you are tracking your log, then At the end of the year, you can figure out the percentage you use your car for business, and then you can write off that percentage of fuel, oil, maintenance, repairs, insurance, license, registration, and so on and so forth. Does that make sense? The only other couple of things you need to know is your trip, even as self-employed, let's say you are renting out an office somewhere. So your trips between your home and your office, back and forth, are considered to be a personal expense. So that's not considered a business expense. But, for instance, in case where you have clients all over Lower Mainland, then your trips would be business related. Does that make sense? Any questions about things we've considered or discussed so far?
So you say from your home to the office is not count?
So, no.
It's just like any job, right? If you're employed, they don't give you gas money to go to and from work every day. But when your office is in your home and you travel to clients, that was part of your work day.
So, oftentimes, even if your office is at home, I mean, when it comes to using your vehicle, there are all sorts of reasons to use your vehicle for business purposes. But a lot of people make the mistake of thinking they track their miles or their kilometers while driving to the office. And technically speaking, I think if you go to CRA's website, they have a list of business expenses. They don't clearly define them, usually, on their website. And their website, for the most part, is quite enlightening. But they stay away from clear definitions, because the moment you define something very clearly, that's when people start, going outside of the rules. And what I find interesting is, yes, people get audited. That's that's not unusual, and I think in a 10-year time frame, it's I don't know what the odds are, but it's don't be surprised if at least 1 year in 10 years you'd be audited. But as long as you are good at maintaining the records, then you will be okay. Actually, Moses, sorry, does that answer your question?
Yeah. Yeah, I use app to keep track on
Yes.
but I just don't know it's from home to the office, if that one doesn't.
That doesn't work. And that brings, I'll just mention a couple of other things. For instance, we can talk, let's say, public transportation. That often comes up as well. What public transportation is, does anyone use a bus pass, by the way? So if any of you, or let's say student pass, U-Pass, so bus passes and student passes, yes, like one of these, for instance. Bus passes and student passes, you cannot write them off as business expenses. But because they are actually, you get a tax credit for them on the personal side. So everyone, you don't have to be self-employed in order to benefit from a bus pass. However, if you let's say save the tickets from your individual trips, if you have a client who lives in Port Moody and you get on the bus and you save that ticket and you go on for business, it's a business travel for you, then yes, you can write it off as a business expense.
So let's say if my client is not here in Vancouver, let's say I have a client in Calgary.
Yes.
So I booked an airline ticket, I went to Calgary for 3 days, I stayed in a hotel, had a bottle of wine with the client for dinner, did some laundry. When I get back, can I claim the whole trip's expense, like the airline ticket, the hotel stay, the meals, the alcohol, everything?
It's a good question, and ultimately the answer is depends. And every situation is going to be a little bit different, and even within that trip there are certain things you'd be able to claim, there are certain things you won't be able to claim. But for the most part, if your reason to go see that, to go travel to Calgary was to see that client, then there's a pretty good chance you'd be able to write off most of these things. But once again, it's rarely black and white. That's how I see it.
Yes.
Any other questions? Very good. Training and conventions. So to those of you who are self-employed, the fee that you paid for coming to this particular event, you can write off as a business expense. And by the way, you'll see the feedback form that you'll find in your envelope. We'll talk about that later. If you would like a receipt for it, I'm more than happy to send you a receipt by email. And cost of eligible property, so if any of you have patents, trademarks, things of that nature, yes, that is a business expense as well. And then because every business is a little bit different, then there's a good chance that you'll have some expenses that are not applicable to other businesses. That's that. And for GST information, you don't really have to worry. Any questions about that?
Is there a difference between leasing a vehicle and financing a vehicle for the write-offs?
Good question. There are differences, yes. And generally, when it comes to vehicle expenses, there are certain rules and there are certain restrictions and there are certain criteria. When it comes to, okay, I'll give you an example.
Well, I was kind of going over this with an advisor today, and
Yeah.
he said if you're financing it, you get to reduce the deductions, like the depreciation of the vehicle every year, it's like 30% or something.
Yes.
And then you have to make that as a deduction on the year. But then if you lease a vehicle, then it would just be the same amount every year.
It's
yeah.
a little bit tricky because there are a couple of restrictions
Yeah.
in the formula on the calculation how much you can claim as a lease
Mhm.
every year.
Mhm.
And the amount that you claim as a lease actually depends on the amount that you've claimed in the past.
Okay.
And the formula, it's not a very simple formula, but there are a couple of restrictions.
Yeah.
So it is different, and what I suggest is actually the best way to do it is to put both of them side by side, and
Okay.
you may be able to see which one is better.
Okay, do you feel that one way is more advantageous than the other? Or it just kind of depends on?
I think it depends on a couple of things.
Okay.
Other questions?
Alright, a few quick questions. So for the insurance part, does that mean also the dental and all of that, like your health insurance?
Okay, good question, we'll talk about that.
Okay, sorry. And then the last, second thing, is training and conventions, does that include, like, let's say I'm enrolled in a BCIT part-time program just to, like, further myself within the field, like, is that?
A very good question. Both are tricky, but both are very good. When it comes to health and dental, so if you are self-employed, most of the time you can write off the premiums that you pay, so the payment that you pay into your health and dental plan as a business expense. If you cannot write it off, and by the way, the part that you do pay out of pocket, because most health and dental plans they cover up to a certain percentage, let's say up to 70, up to 80%. So the part that comes out of your pocket, that can oftentimes be claimed as a medical expense on the personal side. So regardless of your business, but you can sometimes do both. But so that's on the health and dental side. If you're self-employed, if you're not self-employed, you cannot claim health and dental unless it falls under taxable benefits, which is something that would be in your T4, so not something you need to worry about.
So when you say claim both, you mean, like, both works for both, you would write it for both categories?
But yes, so one of them would be part of your business expense, and whatever is not covered by your insurance, if the amount is high enough, and so that's the caveat. So if your medical expenses generally, this would be irrelevant to anyone who, like, self-employed and non-self-employed. If your medical expenses exceed, the threshold changes every year, but let's say this year it was about 2,200, okay? So if your medical expenses, by medical expenses I mean prescriptions, physio, chiro, glasses, everything, dental, if that exceeds, let's say 2,200, you can claim it as a tax credit on the personal side. But the premium that you pay for your health and dental, actually it would be a deduction on your business side. That was the first question. The second question is a little bit trickier because it depends on the program. If you take courses, so let's say if you take a course, let's say you go to some private program and they are going to tell you, listen, you pay us whatever, $100 and we will teach you this particular skill. So that would be something you can write off as a business, not a problem. If you go to BCIT, the difference is BCIT is a licensed educational institution, and at the end of the year BCIT will issue you a slip called T2202A. And the slip called T22028, you can claim on the personal side, not necessarily on the business side. So sometimes you get into the issue of, okay, well, so which one do I claim? And truth is, I mean, just if you look at the numbers of it, claiming it on the business side will always be more preferential than claiming it on the personal side.
Always be more, sorry.
More better. It will be better from a mathematical perspective, from a financial perspective. We won't really talk about the difference. If you remember the most important slide, how taxes work in Canada, I told you there are two things. There's the deductions and the tax credits. So deductions are usually better than the tax credits, usually. And when you're self-employed, you have a lot of deductions. So it's a very good thing for you. But when you go to school, tuition is a tax credit. So if you have an option of tuition or deduction, then deduction would be, if you write it as part of your business, yes, generally you would be able to write it off as a business expense, not always, but generally. But if that's the case, you won't be able to claim it on the personal side. So bottom line is, it's a little bit tricky. Once you're in that situation, send me an email and we'll figure out what's better for you. Tough question, but a very good one.
That's something the accountant would help you decide on, right? Generally?
Generally,
Yes.
And the caveat with, see, now we're starting to go further and further.
Sorry.
But just to give an example, if you go to university and pay for your tuition, you can claim your tuition as a tax credit, and it's great. It's from a tax perspective, it's fantastic for you. If you go to university, you get educated, but you did not pay for your school was paid by an organization, your union, or your employer, then you cannot claim it. Or sometimes you can claim some part of it. Or sometimes, depending on who paid, how much they paid, and so on and so forth, it gets a little tricky. So the bottom line is, when you're on your own business and when you're on your own business and your business pays for your education, generally speaking, you can write it off as a business expense, generally speaking.
So how about those?
And mathematically, that ends up being more beneficial for you.
Is those online education?
Sorry?
Those online education, like teaching you how to do Facebook advertise, those is able
Yeah,
to
sure.
claim? Another question is, if you're keeping the receipt, can I just take a picture, or I have to keep the original receipt?
Very good question. Generally, the receipt does not have to be a physical receipt, but there has to be a receipt. And we'll come back to that. Remind me when we talk about the practical suggestions for the business, we can talk about receipts in much more detail. Good. Any other questions?
If my company has two offices, say one in Seattle and one here, and I'm already, the Seattle office is already paying taxes to the US government, do I have to pay any taxes here based on the revenue I'm making there, or only the Vancouver office?
Excellent question. Definitely outside of the scope of this particular course, but generally, the strategy is as follows. If you are a resident in Canada, and when I say a resident in Canada, by the way, regardless of your immigration status per se, it doesn't matter. If you're immigrant, visitor, tourist, student, doesn't matter. If you are a resident of Canada for tax purposes for the whole year, you are paying taxes on your worldwide income. So if you're working for an American company and you are paying taxes in the United States, that income that you earned in the United States is going to be included in your Canadian income as well. But oftentimes, the taxes that you pay there will be counted as part of your taxes as well, with a few caveats, and then it gets really tricky. So just be careful and think about it before you start accepting jobs in the United States.
Is it the same if I own, actually, like I'm talking about my own company. If I own a company and it has two offices, it's the same thing. So if my
so it doesn't matter, you can have as many offices as you want.
Right.
The question is, and keep in mind, I have no comment about US taxes. It's outside of my scope of interest or expertise for that matter. So if you have two offices and you're paying for both offices, not a problem, because it's a business expense in both cases. But if you have income in different countries, and by the way, do any of you have clients outside of Canada?
Not right now.
Okay, so if that's the situation, not a problem. Whenever you get income from your clients who are outside of Canada, as long as you convert it into Canadian, because ultimately all the foreign income gets converted to Canadian, doesn't matter, you're gonna have clients all over the world, actually I do as well. What is important is, yeah, and expenses that you have outside of Canada, you write off as a business expense, converted once or exchanged into Canadian rate. It may get tricky, by the way, which currency you use, because it changes daily, but that's a whole other issue. Did I understand your question correctly?
Yeah.
Okay,
Thanks.
good. Other questions? Wonderful. Okay. So next we are going to talk about a very important thing that a lot of self-employed people don't realize. And in order for us to talk about that particular topic, we're going to do a side step. Okay? And we'll talk about business obligations of someone who hires other people in Canada. If you ever hire someone in Canada, you have two obligations, only two, but they're important. Obligation number one, you need to withhold and remit certain things. Those certain things happen to be Canada Pension Plan, employment insurance, and taxes. Okay? Oh, sometimes GST falls under that as well, but that's a different discussion. Your other obligation is you need to issue a T4 by the end of February. So those are the two important obligations. How does this apply to a self-employed person? You'll see this in a minute, and this is very important to understand. So in a typical situation where you have an employer, okay, so forget self-employment for a moment. If you have an employer in Canada, this is how it works. Everyone has to pay CPP, which is Canada Pension Plan. So your employer would withhold 4.95% of your CPP. They would withhold 1.8% of whatever your income is, 1.88% into employment insurance, and they would withhold a certain amount of tax that you need to pay based on your income and your tax level, okay? Now, they will withhold it sometimes in a separate account, how they do it doesn't matter. Now, they are going to remit all these things to Canada Revenue Agency. Now, what you don't know is that they're going to contribute their own 4.95% CPP, their own 1.4 times whatever EI they collected, and nothing for tax. So they will actually remit both of these things to Canada Revenue Agency. And then they are required to do it either monthly or quarterly or bi-weekly, depending on the size of the company, number of employees, and a few other things. How is this relevant to you? I'll tell you how. When you're self-employed, you need to pay CPP, and you need to pay twice. Why twice? Because you're paying the employee half and the employer half. Now, your EI is not mandatory, it is optional. So you can, EI is employment insurance, you can get employment insurance if you want to. Now, employment insurance, for those of you who don't know, are a certain proportion of your income that's calculated based on a few criteria that a person receives if they lose their job, or if they go on a health leave, or if they go on maternity leave. So a lot of individuals get optional employment insurance because of maternity leave. If, let's say, a young lady is self-employed, she knows at some point she'll need to go on maternity leave, and EI is a viable option. There are a number of criteria, restrictions, there are a number of rules, but it can be done, and it can be a very useful tool for people. Any questions about that? And this is something that a lot of people don't realize, and I hear this, so just to give you an example. If, let's say, if you live in Canada, and you work for someone, so you are employed by someone, if your income is, let's say, $11,000, okay, on $11,000 you pay no tax in Canada, if you're here for the whole year, because of certain tax credits. If you are self-employed, and you earned $11,000, on $11,000 you pay no tax, but on $11,000 you need to pay CPP. And a lot of self-employed people don't realize this. So at the end of the year, they do their taxes and they say, I only earned $11,000. First of all, it's not a lot of money, but second of all, CPP, we're talking about, it's 4.95 times 2, it's 9.8%, it's about 10% of $11,000, that's about $1,000. So oftentimes it comes as a great shock to people, but this is one of the caveats of being self-employed. You need to pay CPP.
So you have to pay CPP twice for yourself?
It's twice for yourself, that is correct. Now, the formula, you don't always have to pay it. There is, CPP has a, oh, and this is, sorry, this is an important thing to mention. Sorry, I forgot to mention it. Both CPP and EI, and tax for that matter, they have an upper ceiling, okay? So the threshold, for instance, and it changes every year. So this year, the threshold for CPP, I think it was about 2,200, I think. And then for EI, it was about $900. So if you're employed by someone, once you've paid all of your CPP, all of your EI, that's it, you no longer need to pay it. For self-employed people, so if your income is, let's say, more than $50,000, you end up paying about $4,800 of just CPP alone. So that's a big chunk of money. But once you pay it, that's it. And what I'm trying to tell you is, in a way, CPP is a separate story from taxes. And one of the things that I'm hoping that you will take away from this event, that number one, the more you understand about how taxes work, the better off you will be financially and otherwise. And number two, if you're self-employed, remember that you not only need to worry about taxes, you also need to worry about CPP. Mohammed.
Is the CPP same as RRSP?
No.
Oh.
Good question. CPP is, they're actually very similar. CPP is Canada Pension Plan. So this is a big, the best way to describe it is a big bank account that every single Canadian puts money in while they're working, so that when they retire many years down the road, they will start taking money out of that bank account in order, that will be their pension, part of it. RRSP is your own personal bank account, where you put money for your retirement. So it's similar, but it's not the same.
If I work as a full time, and then
Sorry, Moses, speak up.
if I'm a full time, and then I have a part time as a self-employed, do I need to pay both?
Very good question. So if you are self-employed and employed at the same time, this is actually a very useful situation, because you pay your CPP on both, in a way. So CPP self-employed, you need to pay 9.8%, but wait a second, you've already paid this particular CPP. So generally, no, once you hit the full amount that you're supposed to pay, that's it. And the CPP that you paid for your employer actually counts as the CPP that you paid. So it